Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1438, and today's date is November 20th, 2017, and the title of the episode is A Closer Look into How We Were Tricked into Believing the Economy Has Recovered. Now, before I get started, I just want to make an announcement. I uploaded an interview with Craig Hemke. It is on the X22 Report Spotlight YouTube channel. So all you need to do is go over to YouTube, type in X22 Report Spotlight. It'll bring you right to the interview, or you can come over to x22report.com or newssentinel.com. Scroll down a little bit, look over to your right-hand side. You can play the video right on the site. Or go to Steemit. That's steemit.com/@X22Report. And you can play the video right on Steemit. Let's get into the economic collapse financial news. Now, we've been breaking down how the economy in a lot of the countries around the world, they are not doing as well as the corporate media wants us to believe, as doing as well as the central bank wants us to believe, or the governments want us to believe. Now, we understand that Spain, Italy, and many other countries, France, throughout Europe, they're having problems. Especially Spain and Italy. And, of course, yes, Greece, Cyprus, and the others. But when we look closely at these countries, we can see that there are major problems. Now, Spain, they have a major pension problem. Now, a lot of countries do have a pension problem. Here in the United States, we have a pension problem. And we can see they're trying to cover this up by introducing some type of bailout for the pension system. Now, if we look in Spain, the country's Social Security Reserve Fund, which was meant to serve as a nationwide nest egg to guarantee future pension payouts, well, guess what? The government bled it dry. It's completely gone. And what is happening right now is the pension system in Spain is collapsing. Social Security systems growing deficits are getting larger and larger. As a result, the pension pot has shrunk from over 66 billion euros in 2011 to just 15 billion in 2016. Now, to avoid wiping out the fund altogether this year, the Spanish government extended a 10.1 billion euro interest-free loan to Spain's Social Security system, which enabled it to pay out the two extra pension payments due in June and December. That way, only 7 to around 7.5 billion euros will be tapped from Spain's public pension nest egg. Last year, it registered its biggest deficit in history, 18.1 billion euros, which was covered by the pension pot. In 2017, the deficit now is forecasted to be about 16.6 billion euros. Without any type of large annual cash transfusion paid for with freshly issued government debt, the system would have collapsed this year. And this fix that they introduced by just, putting in more money, it's temporary. So how did things get so bad in Spain? Well, there are two main causes. First, they have a rapid aging population. Secondly, people don't have decent paying jobs. Since the financial crisis, there was a huge amount of austerity placed on the Spanish government. And for the bailout, which they received, which was about 60 billion euros, the Troika demanded harsh wage cuts and sweeping labor reforms. And the Spanish government went with it, said, that sounds great. Ever since then, the young workers, they cannot support themselves financially. They don't have high-paying jobs, and they're not contributing to the pension system. So it's imploding. And this is not the only country we see this in. We see this in many other countries. Here in the United States, for example, we see this. And it's going to start to turn out that all these countries have the same problem. What the central banks normally do in all these different countries is they manipulate the numbers. They shift things here to there because they need their debt system to stay alive. And this is why they're always telling the countries to, cut this, cut that, because they want their debt paid. They want to give them some more debt. But in the end, it doesn't work out. We see these storm clouds are on the horizon for Canada. Yes, Canada has been slated as, look at real estate, it's continually moving up. Look at their crude oil, everything is great. Look at how the economy's doing. Now it's starting to fall apart. And we're starting to see that the real estate market's not doing well. We're starting to see the crude oil area is turning and declining right now. And we have to remember why this is happening here. China is a very big part of the real estate in Canada. Same thing in Australia. Here, yes, there's a lot of China investment, and there's many other speculators here in the United States. And what we're seeing right now is that China is now pulling out because they're taking their investment dollars and they're putting it towards the One Belt, One Road, and they're investing in that instead of investing in other countries. And it's starting to become noticeable in all these countries. And what we're seeing is that in Canada, the real estate boom, well, it is declining now. It has been going up and up and up like a bubble, and all of a sudden, it has turned downward. So the storm clouds are definitely gathering right now, and we're starting to see in many of these different countries, there are many, many problems headed our way. Here in the United States, we see that someone came out and they dropped or dumped 15,000 contracts in under 2 minutes, which is about $2 billion worth of notional gold in seconds this morning. And this tells us that they're trying to keep the gold prices at a certain level. They don't want people to catch on, and we talked about this before in other reports, where inflation is starting to tick up. China, Russia, and many other countries, they already know the inflation rate is much, much higher than is being reported. This is why they're piling up on with gold. Plus, we know that China, the central bank, is moving towards China to become the next hub of where they're going to issue maybe the petro yuan. We know there's going to be a lot of manufacturing in China. And we know that they might use the yuan as some type of stabilizing currency, or the SDR where the yuan is going to be included. We also see that these countries, they're protecting themselves for what is about to happen. And when inflation moves up, guess what? The value of the currency decreases. Gold is a hedge against that. And we can see there are certain powers that are controlling the financial industry, and they don't want people to realize that gold and silver and copper and platinum, these are metals that can be used to protect yourself against inflation. Now remember, this whole entire economic recovery, it's fake. It's phony. They manipulated it to the point where everyone really believes that the economy is recovered, where our unemployment is at 4.1%. I even see that they're saying that the unemployment rate is going to go below 4%. That is a manipulated number. And of course, the corporate media is out there saying the corporate earnings, they look fantastic. And if we look closely at the corporate earnings and we dive into these numbers, we can see what these companies are doing. Now, all 30 companies in the Dow Jones Industrial Average have now reported earnings for the third quarter. And this is required that they report these earnings under the Generally Accepted Accounting Principles, GAAP. Now, Merck & Company, for example, they miraculously turned its loss of $0.02 per share under GAAP into an adjusted profit of $1.11 a share. This is not a one-time event. They continually do this where they manipulate the number. Now, Merck keeps showing up in the top 5 Dow earnings adjusters time after time. And we also see Pfizer, Coca-Cola, GE, they're all doing the same thing. And when we look at the Dow component companies, and we see how much they are manipulating their numbers. Now, of the Dow component companies, adjusted EPS exceed GAAP EPS by the following. Merck, 5,650%. Walmart, 72%. Dow DuPont, 67%. Coca-Cola, 52%. Pfizer, 43%. Johnson & Johnson, 39%. GE, 38%. And when we look at this, we can see that they're continually manipulating these numbers to make it look like the company is doing well. Let's take Twitter, for example. They lose money every year. But after its adjustment, they're always, guess what? Profitable. In the last quarter, it lost $21 million under GAAP on declining revenues. But when they manipulated the numbers, everything turns out fantastically. They turn it into a profit. These kinds of tricks, well, they can make it seem like the company's doing a lot better than it really is, even though revenue and sales are declining. And what we're seeing right now is that when this whole thing comes apart, when the system breaks down, just like in 2008, when we saw all these companies come out and say, oh my God, I need a bailout because, yeah, we lied about how we were doing. The automobile industry did it. We saw AIG do it. We saw many other corporations come out and say, yeah, we need this bailout, especially the financial institutions. The same thing is going to happen here. When we look at the pure revenue, the pure sales, these companies, they are losing money. They're not doing as well as they are reporting. I mean, Enron, people thought Enron was doing fantastically. This is the way of the future. Look at Enron. Oh my God, it's incredible. The corporate media was all over it. And then, all of a sudden, it fell apart. 2007, 2008, everyone said, oh, the subprime security, look at this. Oh my God, everyone can buy a house. And everyone was buying houses. The financial institutions and pension plans were buying the subprime securities. They were rated AAA. It was all fake. The same thing is happening right now. And this is how they manipulate everyone into believing that the economy is doing a lot better than it is. Now, if you take all of it, you take unemployment, where they completely manipulate it. You take GDP, where they completely manipulate it. I mean, they went all the way back to 1929. They included research and development to boost GDP. I mean, if 70% is about, people spending in retail, and retail is dying, and there's a retail apocalypse, and there are more and more stores that are closing, how is GDP moving upward? It makes no sense. Same thing with tax revenue. How is the tax revenue coming into the federal government declining if the unemployment numbers keep coming down? Same thing with the state tax revenue. The whole thing has been created to make you believe and think that everything is doing well. And one little thing goes wrong, everything falls apart. And once that starts to happen, all of a sudden, everything just starts coming out. People in the beginning say, no, that can't be. It's completely impossible. It's not impossible for everyone to be lying. Yeah, it's completely possible for everyone to be lying. And it always comes out sooner or later. I mean, look at what's happening in Hollywood. Look what's happening in D.C. right now with the sexual harassment. No one believed it before until the first sign of it came out, and then other people started talking about it, and then other people started reporting about it. And it's like a snowball effect. The same thing's going to happen with the economy. It's not just going to be one company, it's going to be multiple companies, and they're going to start laying off in droves. The whole thing is going to implode on itself, and this is why you need to be ready and prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.